Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, September 17, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, just like we reiterated last night, we're going to do it again tonight. There's a lot of stuff on the docket, not only today in general, it's this week. It's this time frame. So, for example, today represents the full/new/harvest moon. This is regular way quadruple witching options expiration week. It is the end of a quarter. It was the contract roll for the futures contracts. Today was day one of the FOMC two-day meeting, culminating Wednesday afternoon with an interest rate decision. Is the Fed going to give us 25 basis points or a 50 basis point cut? And what's the market going to do? How's she going to react with either one? That right now is the prevailing question. It's the $64,000 question. You have to ask yourself, and we talked about this in the live room just to get a better perspective. Here's the weekly chart. We don't need these lines right now, but you have to ask yourself, why is the Fed cutting, and why would they even consider cutting 50 basis points with the stock market at an all-time high? What could possibly be wrong out there? Is the stock market wrong? Or is the Fed wrong? Is some other reading wrong? I don't think all those things can be true at the same time. Something's terribly wrong enough for the Fed to need to cut 50 basis points, and at the same time, we've got new all-time highs or close enough to all-time highs in the stock market. And by the way, we did have an all-time high today. We just didn't have a closing high, but we got an all-time high. The Fed is cutting 50 basis points. We're at an all-time high. What's the dealio? It doesn't make any logical sense. This is common sense market analysis. That's not common sense. One would say, yeah, but the Fed's reading is on the economic numbers, not the stock market. Bullshit. The Fed is driven by the stock market, period. Full stop. It is the tail that wags the dog. What does the Fed know that we don't know? Or maybe the Fed doesn't know anything. We're going to find out in short order. Whatever the Fed does, 25, 0, stay pat, 50 basis point cut, doesn't make any difference. The market's going to do what it's going to do. Can it use a 50 basis point cut as an excuse to have a blow off top and go up another, let's say, 100 S&P handles, 10 points in the Spider? Absolutely. There's no law that says that cannot happen. Can they absolutely pull the rug out and have a bona fide sell-off after the Fed announcement? Absolutely. There's no reason that cannot happen. So both things are on the table. Right now, we're waiting on the Fed. How about the lazy swing trader automagical algo system? About a profit target in Big Mo, Altria Group, shorted them, entry price about 52.50. They went a touch higher, they came back down, gave us the base hit, which turns the trade into a risk-free, emotionless trade. A short trade at exactly 52.56. Covered today, first target, $50.45. Low of day, $50.43. Funny how that works. It is now a risk-free, emotionless trade. The rest of it is what we call in the trading parlance a free ride. Short, Big Mo. Here's daily chart view, lazy swing trader, automagical algo system. Now, what about the day traders? What about inside the numbers? What about the live room stuff? We're around the all-time highs this morning. All-time highs were 565.16. We have a gateway here. That's important because the gateway is an important number. It was important yesterday, important again today. So we'll demark that on the chart, 564.45 as a gateway to the all-time high and also a gateway back down in the other direction. Right of the vertical is today's activity. Here's a 5-minute chart of the SPY. The arrow is pointing to a spike below the gateway and a bounce back up to and above the all-time high, 565.16. But wait, there's more. There's the flat line, 562.85 or 86. But if they were to get below that, they want to pay a visit for another leg lower down to what? 561.45. Remind you, this is at 0:30 in the morning. They were gapping higher at the time, or poised to and did gap higher at the time. 561.45. Come to the game prepared. Look at this stuff. 561.45 identified at 0:30 in the morning. But wait, I'm telling you, there's more. Let's see what happens as the day's about to get underway. 9:15, 15 minutes before they open for business. They're pushing above the former high. That was garden variety at the time. Not much we can do about that. At new highs, all we have are formula-driven numbers or some other hocus pocus. Hocus pocus is a trading term. How can we figure out where the market's going at new all-time highs unless we have either a formula to figure it out or some other crystal ball hocus pocus? And yes, I do have one that's not too far away. 566.40 is such a place, give or take. 566.40. 566.40. High of day, 566.58. And the, as they say in the trading parlance, the rollover. Look at this objectively. Low of day on the board at 0:30. High of day on the board before the opening bell. Gateway to the highs on the board at 0:30. How you doing? Do you know your numbers? Can you use these numbers to your advantage to make money in the market any given day, each and every day? You decide that for yourself. I'm showing you the goods. You decide whether you can take advantage of the goods. I highlighted the important stuff. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. It was put up here before the opening bell even rang. Pause the video, read the notes, go back to the chart, and double check the work. We only had 2 potential stock on the move opportunities this morning. One was Solar Edge, SEDG. The other one was Nucor, NUE. One, Nucor hit its entry objective. We'll take a look at that one on the charts. Nucor. The first support number on the board was 138.50 for Nucor. The low of day happens to be 138.40. And the absolute garden variety, rip-roaring rocket ride up to a high of 144.45 in a matter of minutes. A $6 rocket ride de jour. That doesn't happen every day, and you never know which ones are going to give you the rocket ride. We had traders in the live room that rode it right up to the gap, took the profit at the gap. Nice rocket ride, nice trade. That was, by the way, the trailing portion of the position. We're not holding from 138.50 all the way to the gap first target. We have to take profit along the way. That's what we're taught to do. If, capital I, capital if we're treating it as a business. What's going on over in Camp IWM? How about some relative strength? By the end of the day, they were up 0.8%, $1.80, but they did put in a tail slash doji candle slash lower high looking situation. So you have, we'll use this tool, you have the high, you have a lower high, and you have a doji candle with a tail at a lower high already today, but you are above all the moving averages. The trend is your friend. The trend happens to be, yes, the dominant thing. Trend on the daily up, trend on the weekly up. It's going to be in all the same market situation around the Fed tomorrow afternoon. Right now, we're waiting on the Fed. Tomorrow afternoon, all bets are off. Charts are going to change. They're either going to go up a lot or down a lot, whether it's immediately or within a day or so following the Fed. That's the general schematic. What about the folks down at the transportation department? My second favorite market leading indicator next to Camp IWM, but a number one canary in the coal mine, up 1% today. More relative strength over the SPY that was basically flat-ish. Above the trend line, above the triangular trend line, the one we've been watching for quite some time. There's your weekly chart. Tried to break out a number of times so far, could not sustain so far. Is this the hint? Are they running up into the event? Is it a buy the rumor, sell the event, or is this going to be an opportunity for a blow-off situation? We don't know the answer. We have to wait till tomorrow afternoon to find out. We certainly can guess at the answer and be right sometimes, but the reality is we don't know. What about the Q people? Really no change from last night. Flat-ish day, up 25 cents, 5 bips, 5 basis points. That's a rounding error. We still have the lower high situation and the higher low situation, which creates a triangular situation. Above all the moving averages, we'll narrow it down and say the trend is your friend until proven otherwise. The trend is the dominant thing. And again, for the second, third, fifth time, all bets are off tomorrow around Kabuki Theater, the FOMC announcement. Markets can move in one direction or another, very large, and therefore we can throw out whatever's going on here in the short term. We're waiting on the Fed. XLF 45.33. Well, that's the aftermarket print. 45.40 was my number. They hit it today, backed off of it a little bit, bounced it at the bottom number just below 44, and stopped today, day one, up at 45.40. They're above all the moving averages. The trend is your friend. There is nothing wrong with the XLF. And if there's nothing wrong with the financial sector as a whole, then there's nothing wrong with the overall underlying structure of the market. Any change to Smashmouth, SMH, semiconductor space, no dice, down 8 cents. That's a rounding error. We're in the same position we were yesterday. So there are no changes to report in Smashmouth. Higher lows, lower highs, in and amongst the moving averages. Chart looks different than the rest. That's the Cliff Note version of the net. Hey, by the way, have I told you how much I appreciate each and every one of you? Without you, these videos, they are not possible, and that is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.